Alright guys, so I think this actually is a pretty special day because this marks the end of a 15 or 20 or 13 video streak of me being shirtless, right? Um, and I think this is the shirt I was wearing the last time I was wearing a shirt. So I don't really wear shirts that often when I'm at my house. But yeah, so we got a video with the shirt on today, which is different than normal. Anyways, another thing that I want to get into before we start the review is my second to last video I made. It was about reaching 100 subscribers. I don't know if you guys look down right now or look up wherever it goes. I think it's like up when you tap on the screen now. We hit 100 subscribers 2 videos ago. We have 171 subscribers right now as of recording, and I have the last 3 videos have gotten a lot of views, which is really cool to see. But I just want to cover that real quick because that's been pretty cool, and it's been really motivating to see, and it's been making me even more inspired to do my best trading. And yeah, so anyways, we'll get into the review. I'll keep it short and sweet tonight, doing a little bit later, 8:30. I'm gonna get back to just doing them right after I finish trading the day, but I didn't today. I was busy right after trading, so then I'm getting to it right now. So anyways, daily bias. Oh yeah, we took 3 trades, 2 break even, 1 winner. A few mistakes I've been making. If you're not new to the channel, you know these mistakes. You could probably guess it. You know what? You could literally try and comment and guess the mistakes I've been making. If anyone that watches a few of these videos, you could probably guess the mistake I made today. But regardless, going into the day, we are all-time highs. This is the 1 hour. We are all-time highs. I don't even need that one anymore. All-time highs. It is what it is. Price goes up, right? I've talked about this before. All-time highs, price just pumps and pumps and pumps for no reason. Going into the day, I had no real daily bias because look at this. We have no fair value gaps on the way up, not even on the 4 hour. Absolutely nothing to give me bias here. We did reach into this order block. Wow, that's actually beautiful. I just noticed that. We reached into that order block on the 4 hour right here. We dug into that order block and we reversed off it. But anyways, there's no bullish fair value gaps, anything like that. We did inverse this. We did have the S&T. We're at all-time highs, so we could have been bullish. But I had no bias going into the day because we are at all-time highs. It's very hard to trade at this point. And wow, we really respected that order block, the 4 hour. But anyways, go into the day. Again, no real bias, the 15-minute. If you look, all I had to go off of was Asia low and London high. I had nothing else to really go off of. Market opened around 9:30. Bang, right here. We take Asia low right here. We even sweep this low, and we do hold this 1 hour bullish fair value gap. It's very small. I don't really care about it, but we do hold it, which is nice to see. And the first trade was opening bell price, which became the draw on liquidity. This is the opening price at 9:30. This is the order block we bounced off of, which is at a confluence I just saw. Now looking back, reviewing, but we kind of sell off. We sweep Asia low here. We remanipulate the low of the day by holding this fair value gap. We sell off again. We create this imbalance. As soon as I see us create this imbalance, I was instantly looking for this to get ran. And as soon as it got ran, I jumped in along right here. And when it took this high out, I got stopped at break even. That's my mistake. As sure some of you guys could have guessed it. Getting out of trades early, going too aggressive to break even. This is the first little stall. It doesn't even go negative really. And then it would rip to take profit, and that would have been a nice 30-point trade to start the day. And that was just a mistake Monday. And I'll get into my mistakes in a little bit after I go through the trades I took. But this was a nice trade. We had this nice order block here, and once you see this nice fair order block, you know that if we inverse, we're probably gonna be pretty bullish. So this trade was pretty good. The only thing I have to say is I just don't like where we're at on the higher time frame. We are just consolidating. We don't have any clear low that we can sweep or manipulate. We don't have any fair value gap to bounce out of. Besides that order block that I just discovered, we don't really have any real good reason for price to do anything here. So I just kind of sketched out. So I took it with lower size. It is a good inverse. It had good momentum, but it's not like an A+ model. I don't think it's an amazing trade. I don't think it's a bad trade. It is what it is. So then we come up, sweep this high. We come down to this 5-minute bullish fair value gap right here. As you can see here, we have this one. I was waiting to see if this got disrespected, to see if we were going to continue selling, but we end up holding really strong. We were selling off through it, and the last minute before the candle closed, we close up here. So my second entry was on the 3-minute. The 3-minute outside of this 5-minute. I end up going long when this 3-minute broke to the upside. I jump in along, and my first target was these equal highs right here, and as you can see, we reached the equal highs, and we then failed to go higher and take out. This was my other target, and then the high over here, and these highs. We failed to go higher. I got stopped at break even on the rest, and then the last trade I took was this 1-minute inverse right here. And I took this with 2 micros as well, and I got stopped at break even because I got scared in the trade and got out early. But this trade was very, very good. We swept the low here, the internal low. We also had an SMT with ES and then Q. We swept this low and ES didn't. We were holding the 3-minute. We were holding this 3-minute inverse and the 3-minute bullish fair value gap. So we had a balanced price range is what that is. We had a balanced price range. So with the balanced price range, the SMT, we sweep liquidity on this low. Let's just get rid of this. We're holding the inverse. Then when we inverse this fair value gap, I knew that we'd run to this high and this high where I might take profits. But I got stopped at break even. I just closed the trade when it was hesitating through here. Again, I don't know. I do know why, but I shouldn't have, and that was my mistake. And if I would have held to the all-time highs, we would have been fine. And that was the day. A very, very clean day. If you look at this market maker model, we have let's look at it from this side. We have the original consolidation here. We can just do it from here. We had original consolidation. I would say is more of this. This is kind of an outlier. But we had the consolidation. We had the manipulation leg down here. We manipulated. And then we saw the expansion move back up to the upside. So this is your AMD model. You have accumulation, original consolidation. You have then you see then you'll see sell side of the curve. From here, we sell off. We sweep a low. We end up sweeping a low. We sweep a low. We come back down. We manipulate the low again. We then inverse the bearish move to show the sign of a reversal. And then we hit buy side of the curve. We respect bullish order flow. And we sweep out the high here. And we complete the model. I believe we complete the model there. And we continue pumping to all-time highs. This is very, very clean. If you don't know what AMD is, accumulation, manipulation, distribution, I would definitely watch some videos about that. And market maker models, I would definitely learn those because that's how I view the market. That's how I'm able to read what price is going. It just helps make a lot of sense. But yeah, so if just study this chart right here, study why the price, excuse me, look at why price was respecting certain fair value gaps, where they were respecting why, when, how, the SMTs, where the SMTs happen, inside fair value gaps. SMTs after sweeping liquidity, inside fair value gaps where you expect to bounce. Those are where you want to look for SMTs, and just figuring out what the draw on liquidity is based on market structure. This is a really clean day, and it's disappointing that I had a bunch of mistakes that led to just not being able to gain profit as much as I should have. But it's all good because I will come back willing to fix my mistakes, and that's kind of all you can do. The rest of the day just pumped. We ripped from the high here. We ripped another 250 points, which is ridiculous. And then you look from the bottom of the day, low of day, we ripped 360 points. That is insane. That is insane. So hopefully we get some good structure to validate some trades tomorrow. That's the review for my trades. Since this is a journal for myself, I do want to go over the mistakes I'm making repeatedly, which is getting out of trades early, right? I'll get into a trade, and I'll be afraid to lose. So let's say I get into a trade, boom, long position. My trade is, right? Let's say my trade is a 2 risk reward, right there. If I get into this trade, and this is price action, I get into the trade here, I'm going long, and it comes up, and it comes up, and it comes up, and now I'm up here, I'm up profit, and then it comes back down, but I'm not invalidating the trade, and I get out early, but then it goes up and does this, right? Let's say this is how the trade plays out. Then let's get a few more. How do I copy these? There we go. That's actually sick. Ooh, wait. Okay, I can do this. Hold up. I'm trying this. I'm not really. Okay, whatever. Why is that? Okay. All right. So if we have 3 of these trades, or 4 of them, let's just say, I don't need that one. Let's just say we have 3 trades, right? And this is why I have to start believing. And then, or let's say then the last trade we lose. So we have one more trade, and why is it? That's weird. Then let's just say that the last one loses. Command. All right. So we have the same risk reward on every trade, hypothetically, and let's say the last one loses. All right. So I have a close to 70% win rate. I'd say it's sometimes higher, sometimes lower. Let's say it's 75 for the sake of example. I'm not going to put out a million of these different trades, but let's say, let's make this trade even worse, right? This is how some of the trades be. This is how some of the trades be right here. This is how some of the trades happen. Let's make it really bad. All right. Let's just say I have a 75% win rate because sometimes higher, sometimes lower. Again, for the sake of example, what I'm doing in these trades is, if I have a 75% win rate, I could not even flip a coin, but something that has 4 chances. Let's say, like, I don't know, I spin a wheel 1 through 4, right? It's basically like spinning a wheel. If I take an A+ setup, a spinning wheel 1 through 4, who knows? I could hit a winning trade or a losing trade. It's 1 through 4. If I spin a wheel and it's a 3, let's say 3 is a loss, right? And I spin a wheel. Anytime it lands on 3, I lose. Any other number, I win, right? 75% of the time, I'll win. 75% of the time, I win my trades. So let's say that we're in this trade here. This is the trade we're in. If we get in here, right, and we go up, and we come back down, and we go up, and we come back down, but this is our target, and we were up more than 50% on this trade, and then we come down. If I decide to cancel when we go up, we're back up positive, I'm just going to get out. Or you know what? I'm just going to get out of this high. We were negative, so if we can come back up this high, I'm gonna get out of the trade. Or here, if we go up and take out this high, I'm gonna go break even. And then what? You get stopped at break even, right? And obviously this is not a real candle, it's not a live example, but this is what goes through my mind when I'm in a trade. It's, oh my gosh, we were just up almost halfway, then we came back down, and then we came back up. So this trade, what if I went to break even here and then got stopped out here and then ran to full take profit? I just missed out on, let's just say 100 points, or let's just say 10 points, or let's say 20 points. Let's say 20 points is our stop loss, even though it's not. 20 points is our take profit, and 10 points is our stop loss. If I were to have taken this trade and go to break even, then I would have just got break even stop. I wouldn't have lost money, but I only win 75% of the time. So now I just made that 50% of the time I win. So now I'm only winning 50% of the time, and now I can lose 25% of the time. But the margins aren't that good. So then, okay, I made a mistake on a trade, but what if it happens again? The next trade, we take the next trade, we get in, what do? We let it play out, we say, okay, as soon as this trade hits here, because we were up in negative, because it was negative, if we get back to this high, I'm just gonna take it all out. So now I got stopped at break even. Now I took it all out. Let's just say this was 50% of the take profit, so that's 10 points. Now I hit 10 points, 0 points, and that's 2 trades. So now I'm a net 10 points. So now we are net 10 points, right? So we're net 10 points after 2 trades, and both trades would have gotten me 20 points. So I should be 40 points up plus. So I should be 40 points positive off 2 trades, which is 4 stop losses, 4 entire losses of these trades, which I have a 75% win rate. I only lose 1 out of 4 trades. So with 2 winners on a 2-to-1 risk reward, which again, I don't always trade 2-to-1. I don't always trade the same stop loss, but just to drill in the example, if I was trading 2-to-1s, if I had a 75% win rate, every 2 trades, if I win 2 trades in a row, that means I could lose 4 straight trades to be break even. 4 straight. And if you have a 75% win rate, obviously you're not winning 4 straight, losing 4 straight. Then let's say I get into this trade and it goes up quick, and then it comes back down here and I just get out here. So now I got out for 5 points, right? Now we're net 15 points when we should be net 60, right? And then, okay, let's say I do the same thing on this trade. I get out when it comes up and it starts coming down. So I get out here, right? Let's say I get out for another 5 points. So now I've made, or let's say this one's a break-even trade. So we just break even on this one. So we have 15 points when that should be 40 points now because we lost 20, right? We were up 60, 3 trades, and we lost 10. So we're at 50 points. So we're at 50 points because we only lost 10. It's 2-to-1. So now we took 5 trades, the stress of the trade. We won on 2 of them, right? We got break even stopped here. We took profit here halfway, and we got out a little early on this one. So 3 trades, 3 great winners. And then on this one, we get out of break even because we moved our stop really quick and avoided the loss. So good thing we avoided the loss, right? But you see how because of the mindset of avoiding losses keeps me from the real winners, right? In this example where I get the 15 points, I didn't lose a single trade. I had 100%, which break even, I don't know if that counts as 100%, but regardless, I didn't lose a trade in this example, but I made 15 points. And this, the 50 points, I lost a trade. So the correlation between losing and winning is backwards. It's not about how much wins can you get in stack and how can you never lose. It's about when you do win, can you capitalize on your winners. And that doesn't mean my target is, that doesn't mean that on this trade here, my target is this high and I hold for up here and it doesn't hit because I'm trying to maximize my winner. That's not what I'm what the case is. The case is this is your target and you hold to that target. This is your stop loss and you hold. Because of the emotion, you're up, then a little bit down, then back up, making new highs. Okay, it's going great. And then, oh, now I'm negative again. Oh, okay, now I'm back here. I should just take it because we probably could reverse again like we did here. And you tell yourself these lies, and it just affects your trading, your discipline, and your executions. And that's a really nice example, I would say. Maybe it doesn't make sense to anyone else, but it does to me. This is a great example of why psychology is so important, is because, again, this example here, let's just do it to where we have a 50% win rate on 2-to-1. That's great. 2-to-1, right? If I had a 2-to-1 and I was to make 20 points on each one, let's get rid of this one. If I was to make 20 points, so on this one, let's say we won 20 points plus 20-point winner again, minus 10, minus 10. What is that? That's 20, 20, we're positive 20 points with a 50% win rate. Whereas when we stress ourselves out, we get a break-even stop here, a 10-point stop here, and then maybe break even, right? On this example, I made 10 points. It's hard because it's not that black and white. It's not that simple. But I hope the demonstration kind of makes sense to the point that if you hold your trades properly, you'll make money. You'll be fine. You'll do better than if you don't hold your trades properly. And that's the best way I can explain my problem and my struggle and why I do it and why I need to just fully cement the idea of what I need to do, which is hold my trades properly, right? Because today I got 3 trades, 2 break even, and 1 winner, right? If I held this and I made $100 today, right? I trade 5 micros. What happens here? What happens here? I jump in on this trade. We hold to this high. Let's say I held to there. I didn't even scale. That's the first trade. That's the first trade. 31 points. All right? Calculator. We're going to add points. So let's just say I did scale. Let's say I scaled some at this high. Boom. And then I scaled some at this high. Boom. That's 31 points. Let's say I trade 5 micros. So let's say I trail 3 off at this high. That's 1650. So 16.5 times 3. That's 49.5 points. And then on my 2 micros that are runners, my 2 runners get 31 points. Plus 31 plus 31 because that's 2 micros. This trade is 111 points times that by 2 because each point, each contract is $2. That's $233. That trade alone is already more money than I made today. Divide by 2. And that's a trade I took. That's a trade I physically took, executed on, and mismanaged because of psychology. Next, this 3-minute. I got in on this candle here, I believe. Let's see. The high of this candle is 62. So the 62 candle. 62, long position. 62. So I wanted to take some off at here. I wanted to take 2 off. Cool. We got stopped at break even on the rest. We took 2 contracts off. 2 contracts at 13 points. Plus 13. Plus 13. That's 2 trades now. And it's a partial trade. And now we would be up $275 in the day. Again, we only made 100. And then the third and final trade would have been another long here, and I could have held, let's just say I held it to here. Let's just say I took them all off there. I was doing a quick scalp. Or, you know what, let's say we were holding to this bigger model. We got some off there, and then we got the rest off here. So we got 3 off for 15 points, plus, so we'll do 30 and 15, that's 45, I don't know why my math is terrible, and then plus 19 twice, plus 19. So, of trades I physically took, these are all trades I physically entered. I only entered 3. I entered 3 trades. These were all my original targets. I have all of the OBS recordings. These were my 3 original trades, my ideas. My executions, this is where I would have scaled. This is how I would have scaled. Again, I would have scaled this high and this high. I would have scaled 3 here, 2 here in a perfect world. Of course, we didn't do that. Here, I would have scaled 2. I would have left the rest to here and here. Didn't happen. We got 2 in a perfect world. That's exactly how this trade happens. I scale 2 and I get break even stop. It is what it is. And then here, so we'll add 4 points for the break even stop, plus 4. And then here, I would have scaled 3 here and 2 here. And that's exactly the trades, all the execution I took. And what does that equal our day to be? That means our day would be $450 day. A $450 day. All 3 of the trades I took and executed if I did it properly with good psychology. So that's why psychology is so important, because that's the difference between reading the markets good, which I think I can do very, very well now, is I understand the markets well. I can understand drawing liquidity. I understand the fair value gaps. I understand it all, but I just need to put what I know into my psychology and just hold my trades properly. And when I get into a position, manage it properly. And that's the biggest thing. I need to look back and just, when I'm in a trade, be like, okay, if I'm in a trade now, regardless of if it works or doesn't work, how can I manage this properly? Where is a proper place to scale? Where is my proper take profit, and execute exactly how I know I need to? And it goes from a $100 day to a $450 day. Divide that by what I've actually made, $94 times that, or 94 divided by 94. How do I clear? Oh well, 94 divided by 450. I only made 20% of what I should have made today. And it doesn't matter about the money. The dollar amount doesn't matter in trading. Don't focus on that. But this is important. I'm not worried about not making the 450. I'm worried about the mistakes I made in my executions. And we're going to do better because we're actively reviewing these issues. We're going over them. I'm here telling you guys what I'm doing wrong. So I keep myself accountable. I made only 20% of what I should have made today, but didn't, right? So what happens? I made $100. What happens tomorrow when I take a 15-point stop loss? I lose more than I even made today. But if I execute it properly, I could lose 2-3 times tomorrow and be profitable still. So I really need to hammer that into people watching. For myself, this is, again, my journal. These are my daily reviews. I go over my mistakes, what I saw in the market, what I could learn, what I could do better. This is the raw reality. This YouTube channel isn't for any. I love that people get benefit from it. I love that I'm getting views and subscribers from it. It's really, really cool. But I'm talking about the stuff that I need to talk about for myself. You know, I don't make tutorials because I'm not teaching anyone how to trade. This is a personal journal. This YouTube channel is showing my growth to become a very profitable trader. I will be a profitable trader. I can promise that. And I'm just working on that belief, that self-belief. But that's what this channel is about. Again, this is a journal. Everyone should be journaling, reflecting on their mistakes, learning in the markets, because this is how you really get better. 20% can't happen. It won't happen again, or it won't happen as often, right? You don't want to ever be too certain, but these are mistakes I'm making. This is what's holding me back, and I have a solid plan, and I know what I'm going to do to combat these things and come back stronger. Very, very thankful for the 171 subscribers. That's really cool. We could hit 200 subscribers. We could hit 100 subscribers in less than a week, maybe less than 2 weeks. That's crazy to me. Again, the goal now is 1K. That would be really crazy. But yeah, I appreciate everyone that watches these videos. It really does mean a lot. Again, even though it's a journal, it is cool. It's really fun to see the numbers. And it's cool that a lot of people say that I help with their psychology, because that's my biggest problem. So if I can help people, if I can paint an accurate picture for what trading is, and I can give an honest description of the journey, and you guys can see the process for real, maybe it helps some other people out there in the same spot. So love each and every one of the people that tune in and spend their time listening to these videos, because you could be doing a lot of other stuff right now. So I really do appreciate it. I really, really do. And I will see you guys. I hope you had a great day trading. I hope you have a good day trading tomorrow. Real quick, let's see if there's any news tomorrow. Forex.com. Tuesday's tomorrow. Yep, Tuesday. We have core retail sales. Nothing crazy. 10, maybe wait for 10 FMC. Nothing crazy tomorrow. Have fun, be safe. Hope you guys do well. Peace out. I'll see you guys tomorrow.